Hi, I'm Shannon with the Shannon Jones Team at Keller Williams Realty in Long Beach, California. Thank you for joining me today. Our topic is, should I buy first or sell first? If you are considering making a move either now during the pandemic or at some point in the future, and you have a current home, you may be wondering how to get started. So there's a lot of questions that go about that. I'm going to try and share my screen here. So we've got this topic there. And let's just see here. There we go. Buy first or sell first. How do you get started with that? And so there's some different things that you're going to want to consider. What are the factors that impact your decision? One thing you'll want to look at is market conditions. You'll also want to consider what your financial resources are and your equity position in your current home. And you'll want to consider your tolerance for risk and the possibility of moving twice, as well as your sense of urgency or the flexibility that you have with regards to timing. So those are all really important factors to consider. The other thing that you'll want to look at is the current real estate market. And let me just make sure that I can see any comments if they're over there. Okay, so obviously right now we're in a pandemic and it has had some impact on our market. So this is probably not a surprise to you. New listings were down in April, and these are statistics for Long Beach, California. But we certainly have seen some similar statistics in other communities in California. But so for April, new listings were down by 51%. Pending sales were down 68.8%. Closed sales were down 15.2%. The reason that's not quite as big a number is because, of course, closed sales, that's a more of a lag indicator. It lags behind some of the other statistics. But the things that I think that not everyone is aware of is what's happened with the time it takes to sell a home and pricing. So the days on market, and this is measuring April 2020 compared to April 2019, and it was only 24 days on the market. And that is significantly faster selling time than it was a year ago. Median sales price in Long Beach was up by 8.7% from a year ago. And the percentage of the original list price received for sellers who closed escrow in April was actually 100.2%. So there's a perception out there that homes are taking a long time to sell and that they're not selling for what people are asking, and that's just not true. But what is true is that the inventory of homes for sale is significantly down, 31.6% lower than it was a year ago. So why does that matter? Well, if you're going to sell a home and buy a home, you want to know whether it's a seller's market or a buyer's market. Where do you have more leverage? And with the inventory as low as it is still a strong seller's market. But here's some things that you want to consider is obviously we're in a pandemic. And so how does that even work? Things have changed significantly in terms of the process. So we're doing a lot virtually. We're meeting virtually. Obviously, we're having this meeting with you virtually. Electronic signatures are the norm right now. And most activities can be done remotely and digitally. Our marketing right now is significantly focused on digital activities. And if you're thinking about selling a home, it is more important than ever to really check out how the agent performs online. How are their listings presented online? Are there photos and video and 3D tour? Are they across social media platforms? Are people engaging with the properties there? Because I could post something online, but if nobody ever sees it, that's not going to help the seller. So choose an agent wisely if you are planning to make a move. Obviously, I'd love it if you would talk to me. But, choose somebody who's experienced and reputable and has a plan and strategy. You also want to know that the in-person protocol for showings is very different than it was. So no open houses at this time are allowed. And it's very limited who can come into your home. And that's true for when you're selling your home, but it's also going to be true as a buyer when you go to view homes. There's going to be some restrictions. There's advisories that everyone has to sign when they go in. And everyone needs to wear masks and in most cases gloves, but definitely hand sanitizer, hand washing, disinfecting and cleaning between every showing. So there's definitely the CDC, Cal OSHA, California Association of Realtors have all produced guidelines. And so those are guidelines that we're following. So how is that impacting the number of showings? If you put your home on the market, are you going to get a boatload of showings? Well, what you can see is that right about here, when coronavirus became more into people's awareness, showings began to plummet. And it's just been over the last several weeks that the last month that those have been climbing again. But that's because we have such a high demand out there for homes and a very low inventory. So is that true across the board? And the answer is no, it's not true across the board. Not every neighborhood is performing equally in this current market. So there are some neighborhoods in Long Beach where there's actually a relatively high inventory, where the days on market is lengthening and homes are not selling as quickly. And then there are other homes or other neighborhoods where homes are in very short supply, demand is very high. And so if you're planning to sell and buy, you really want to have a sense both in the area where your current home is and the area where your future home will be. What are these factors? What's the inventory? What's the time on market? What's the current demand? What's the trend with pricing? And this is a really key one. What's the likelihood that you'll be able to get a contingent offer accepted? So, and is that going to mean that your current home has to be just under contract, or can it just be listed? So those are all factors to really look at. And then we look at what are your financial resources and what's your current equity position? So when you buy your next home, where's the money going to be coming from for your down payment? How big will your down payment be? Is it coming from your current home? Or if you needed to, do you have some other funds available that you could use as a down payment? So that's obviously going to have an impact on your decision. How much equity do you have in your current home? So it's a very easy formula to figure that out. You just need to know what the market value is. And again, that's something that I could help with. You can actually go to our website, pricemylongbeachhome.com is like a subpage on our website, and you plug in your address and it will tell you approximately what the value of your home is. If you want something more detailed and more specific, you can just shoot me an email. You'll get a little response. It'll have my email address on there, and shoot me an email with some more details on your home, and I can put something more detailed together. But you'll want to know the market value minus how much you owe, minus the cost to sell, and that's your equity. And then you know what are your funds available for down payment, closing costs, and if you wanted to do any work to your next home. And then you want to know what's your ability to pay 2 mortgages. Is that something you'd be comfortable doing? Would you qualify? We're going to have Alex Scurr from NAL Financial joining us in just a moment, and he's going to talk specifically about financing options if you wanted to do that. If you wanted to buy first and then sell, what does that look like? So some other factors that you'll want to consider when you're making the decision that's best for you is your willingness to move twice. So obviously nobody likes moving, but some people hate it even more than others. So are you open to doing that? If you needed to do so, what are your options for temporary housing? Is there someone you could stay with temporarily while you put your stuff in storage? Would you rent an Airbnb? Would you go to the Residence Inn? Would you maybe rent a place for 3 months or 6 months, something like that, on a short-term lease to give yourself some flexibility? How urgently do you want or need to be in your next home? If you have a definite time frame when you need to be there, then that will impact what your choices are. Additionally, how picky are you? So if you need a home that has to be on the east side of the street, and it needs a white kitchen and that has subway tile backsplash with hardwood floors, and it must be on a lot that's 7,000 square feet, and you want a pool and, then you're limiting the number of homes that will be available. But if you're like, hey, I just need a 3-bedroom, 2-bath home in 908 or 90815, and I'm open to the condition, then you're going to have an easier time of it. Also, what's your price point? Are you looking for something where there are very few homes available at that price point, or is there a larger inventory? And so price range and type of housing, those are definitely impacts. So moving along, let's talk about, again, your 2 options would either be sell your current, I'm just making sure we got no comments. Nope, nothing yet. So your options would be either sell first or buy first. So what are the pros if you decide to sell first? Well, one, you have the luxury of time, and you can avoid having any kind of rush or sense of urgency in needing to find that next home. You also have the ability to make a strong non-contingent offer if you close escrow first on your sale. So that gives you your money's in the bank, and you can make your next offer and be a very strong competitive buyer. You also know exactly what your net will be. So instead of estimating what the market value is, once you've sold it, you know what the price is, and you'll know exactly how much money will you end up with. And you'll ensure that you only have to pay 1 mortgage. There's none of that uncertainty about possibly having to carry 2 mortgages at one time. So those are the benefits or pros of selling first. What about the cons? So if you sell first, you may find that you'll be in a rush to buy if you don't have temporary housing lined up. You may need to move twice. And the costs of temporary housing can add up. Again, if you don't have a friend or family member where you can stay, you're looking at other options, and short-term leases or Airbnb or Residence Inn, those types of things can be more costly than your mortgage might be if you look at it on a basis of a month or more. Some tips for reducing the possibility of 2 moves if you do decide to sell first. One is you can make the sale of your current home contingent upon finding a replacement home. There's some reasons that you might want to do that, and there's some reasons that you might not want to do that. So we can go into that in more detail, but I don't want to spend a ton of time on that because I have a lot of information to cover here. But you can also request a lease back from the new owner. And that is pretty common. So let's say that you are doing a 30-day escrow or a 45-day escrow, and you structure the deal so that you can rent back your current home from the new owner for 30 days or 60 days. Usually lenders don't like to see longer than 60 days. And most buyers want to get into their new home before then too. So when you're doing that, you're typically going to pay the buyer's PITI, principal, interest, taxes, and insurance, as a courtesy, because obviously they're having to pay it and they're letting you stay in the home. So you would typically pay that to them to cover their mortgage so you can stay there and have some timing flexibility. So that's just a tip for that. So then we get into, what about buying first? Why would you want to do that? What are some benefits or some pros for buying first? Well, the first one is that you have more flexibility of time to find the right place. So you've already got a home. So you don't necessarily need to be in a rush to find your next home. You also have the certainty that you're going to be able to find the right home before you give up your current home. You will only have to make one move, and you have more control over your moving timeline. So those are some big positives. The other thing, let's say you're buying a place and it's not totally move-in ready and there's some changes that you want to make to it before you move in. Well, you've got some time. You can paint or refinish hardwood floors or, do some other changes before you need to move in without feeling rushed. If you're selling and then you're buying, that's usually a relatively short time frame, unless you're doing a lease back. And so that limits the time you might have to do some of that work. And obviously it's easiest to do some of that work when you're not living in the home. Additionally, you can move out of your current home so that you don't have to be there when it's marketed and shown. So from both a convenience standpoint and, potential exposure standpoint during the pandemic, that might be something that's more comfortable for you to consider. So why would you not want to do that? Well, the major drawback for most people is that it may be a strain to pay two mortgages. You may or may not qualify. And that's something Alex is going to talk about in just a minute here. You also don't know exactly what your net will be from your current home before committing to a price on your next home. So you're obviously going to have a very good idea of what your home will sell for. You want to know what the market value is. But what if a buyer doesn't agree to pay that much? Or what if you haven't gotten a pre-sale home inspection and the buyer discovers something that's wrong with the home that you didn't know about, and that now impacts what a buyer's willing to pay? So those are some factors to consider. And the biggest one, again, is that you may have fewer financing options without selling first. So with that, what I want to do is I want to go ahead and introduce. I'm going to introduce here Alex. And let's see here. Hi, Alex. How are you?
Hey, Shannon. Really good. Thanks. Thanks for having me on.
Oh, thank you so much for joining us. So Alex Scurr is with NAL Financial. He's a mortgage broker. And so he has access to a number of different loan programs and products and a lot of experience with helping people sort out what their options are. So I asked him to join us because, of course, one of the biggest considerations for people in deciding whether to buy first or sell first is figuring out, well, what can I do financially? So I'm going to go ahead and let's just get this queued up here. And go ahead, Alex, if you will, share with us some of your thoughts on what people can do if they wanted to buy before selling.
Perfect. Thank you. So as Shannon's mentioned, it really is it's a question that we get a lot because people are typically trying to move up when they go from one house to the next. Not always the case, but a lot of the time that's the case. So first, I'm going to touch on some ways to use your current house and the equity that Shannon talked about earlier in the slides to your advantage to come up with a down payment for the next place. And there's typically two ways that we do that. One of those is using a HELOC, which stands for Home Equity Line of Credit. And it's essentially like a credit card on your house. You get a certain line amount or limit that you can borrow, and you don't pay on that balance unless you've taken it out. There's small maintenance fees per year for it, but it really is, it's essentially a credit card on your house. It's a great way to think about it. And that's why it's nice. You don't have to pay on the balance unless you've used it. But as you see on the slide, one of the cons is they're typically done on adjustable rates, interest only payments. So you're not paying down the principal balance of the loan when you use it every month or as you pay it every month. But if it's a short-term play and you think you're going to then list your house for sale in the next 4 to 6 months or even shorter after you buy the next place, this is a great option to do. You have to be a little bit on top of your game and get the home equity line of credit before you start to go look for the other property. And it is something that I can help my clients with. So if you have more questions on, specific rates and specific payments, our information will be included after this, and you could reach out to me and I can give you exactly what those are for certain loan amounts. The next way is the cash out loan. And I like this option as well. This is essentially just a redo of the current mortgage that you have on the house, and we add to the principal balance of it so that the difference of your current balance and the new loan that you get is just deposited into your account in cash. The bank just makes sure that you can qualify for that new loan amount. And again, at the end of the transaction, you now have $50,000, $100,000, $150,000 in your bank account sitting there, ready for you to then go and purchase the new place with. Another reason why this is a good alternative would be if you intended to keep the property, because that loan is able to be done on fixed terms with lower, more standard interest rates per the market today. So both of those are really good ways. Obviously, if you sell your house first, you're in a place to just put down the down payment and get the loan that you guys want. But if you have to buy first, these are two of the options that I would consider. And just remember, these two options do require you to be prepared. So if you think that you want to buy a new house, please reach out to us, sooner than later to get one of these options going.
I am just putting here in the comments there Alex's phone number. So if you want to reach out to him with any specific questions about your scenario, I will say everything is so individual based on your income and your assets and the equity position in your current home and your credit and just so many factors. And so we're trying to provide you with really general information here. And I'll pop our phone number there as well. So we're giving you some broad information. And then if you want specifics about how it applies to you, reach out and we're happy to help and answer any questions. So, right, Alex?
Totally, Shannon. It doesn't cost you anything except just a little bit of your time, but we're willing to give you as much information as you need or want.
Yeah, and I just want to say this too, is we never mind hearing from you. Sometimes people say, oh, I don't want to bother you. I'm not sure yet if I'm going to move. I really don't know. And, we really want to be a resource for you. So if you reach out and you have questions, I'm thinking we might want to buy and sell, but I don't know, and you decide you don't want to, that's totally okay. And I know the same goes for Alex. If you're looking into getting a loan and it doesn't work out for you in your individual situation and your family at this time, we're okay with that. Neither one of us is ever going to, make you feel bad because you decided to do something else. So, anyways, should I move on to the next slide, Alex?
Yes, please. I think the next slide is a great one for yet another alternative to the buy first and then sell option. This term, some of you may have heard, some of you may have not, but it was getting used a lot back in the early 2000s, in the middle of 2000s. It doesn't happen a ton now, but it's called a bridge loan. And a bridge loan is, meant to bridge the gap between the buy and the sell. And what it is, it's essentially one loan that's done across the two homes, the home you own and then the home that you intend to buy. It redoes the loan that you currently would have on the house that you own, and it takes that and puts it away, and then you get a brand new one to essentially use as the down payment to go and buy the next place. Okay, it works really good in specific situations. It's really, really good when people have a lot of equity in the home that they intend to sell. And it's nice that it becomes only one loan and you don't have multiple loans going on at that time. The interest rates are, pretty standard interest rates for the going market, somewhere probably around the 4% range. They are done on adjustable rates, but you can do them on interest only payments so that your payment is low, keeping your payment, manageable until you then are able to go and sell that property. Why I really, really like this loan and where it really falls and helps the people is when the sale price of the home that you have is considerably higher than, our typical $600,000 to $800,000 home in suburban Long Beach, and the marketing times on those properties are longer. So this would help you if your marketing time on your home is 6 months or 8 months, because you really are looking for your top dollar price, and you're in a pandemic and you want to go and buy that other place. So it just adds a comfort level to know that you have that one payment for that amount of time, and you then are able to go back and sell the property for top dollar. The slight cons to it are they do come with added costs. There isn't a lot of banks that do them, so because of that, the supply of the loan is less typical, and the banks know that and are able to grab a little bit more money from you to do it. It's not astronomical, but it definitely is. There, assume that you're going to have some added cost to this transaction. And again, the part about needing a lot of equity. This isn't something for people that have about 10% equity in their house at all. You really need to have been living in your house for a while or put a large down payment on that house when you bought it, so that we see you somewhere between 25% to 50% equity in the house that you intend to leave. And this is a very specific situation, so would definitely a client that wants to talk about this would benefit from going over your specific scenario with me. But they're in the market, they're doable, and I would be definitely happy to discuss them further for your specific situation.
And I would say, again, the planning process is so important. If you're going to be selling and buying anytime, but particularly right now, because everything is changing so rapidly with our market and the process and forms and how we're able to show and what we have to do between showings, and that's true for financing as well. So as far as how lenders are processing the loans and what's required and the availability of different loan products, and so you want to know really what all of your options are so that you can feel confident and comfortable with your strategy. And making sure that you have trusted advisors in terms of a lender and a realtor who can really help you explore those options and give you advice so that you're making the best decision for you. So, anyways, just an aside. I'm going to move on to the next slide then. And this is just another kind of option, I guess, in terms of involving selling and buying.
Thanks, Shannon. Yeah, there's a lot of info on that screen, but it's all really good info. And what I'm touching on here is another term that people may or may not have heard, but it's called recasting your mortgage. So a lot of the times when people reach out to me and they want to sell before buy, the reason is because they want to take that large equity stake they have in the house, turn it into a big down payment so that they have a new, more comfortable payment when they buy the new place. And one of the ways we sometimes get around that is for people to quickly understand that you don't need 20% down these days to purchase a home. Even in the pandemic, banks are still doing loans with 5 and 10% down on the purchase side. And then what you can do is you can come back after you've sold your house and take the large lump sum of money that you hopefully have made when you sell it with Shannon and Brad at the Shannon Jones team, and put that down against the mortgage that you have and just recalibrate the payment. It's not a refinance transaction at all. They don't look at your income again. They don't look at your bank statements again. They don't look at your tax returns again. You literally go to the bank and you say, hey, I now have 150 grand that I made from selling my house, and I want to apply it to the mortgage. I have 29 and a half years left on this mortgage. My interest rate is 3.5%. And I want you to now make my payment for the 29 and a half years left based on the lower balance of the mortgage. So it can then take your payment down $500, $750 a month, and put it at the place that you wanted it to be in the first place. The only thing you have to really consider is, hey, we got to, potentially have that slightly higher payment for those first couple months. But it really is a helpful, call it a transaction that we can do to, get you to the point that you ultimately wanted to be, and still let you buy first and sell second.
And they do still have to qualify for both mortgages in that scenario, unlike with a bridge loan where they're actually calculating it based on eventually having just one mortgage. Is that true, Alex?
That is true. That's a really, really good point. So this is, definitely a scenario where we want to create that mortgage plan that Shannon was just talking about. And, the whole reason why reaching out to us, even if this is something that you're only half considering, is important. So, yeah, please do remember that we're qualifying for the mortgage on the new house and the mortgage that you currently have on your old house.
Mm-hmm. And sometimes what I'm seeing is that people maybe could qualify on paper, even though that's not something they're really comfortable with. So it really just depends on how tight their ratios are. Would you say that's accurate?
Correct. Yeah, it's definitely something where, comfort level is important. The comfort level for me is always important to establish, but really, hitting the qualifications of the bank, which today are somewhere, basically you're allowed to have mortgages and debt, taxes and insurance for the properties of about 45% of your gross monthly income. So, 45, 50% typically is the top. So you say you make 12 grand a month, you can have about 6 grand a month that's allocated to all the stuff that you have to pay per month. So keep that in mind. That's definitely something to consider here. But the recast option is really, really a great option to get you to where you ultimately wanted to be, call it 4 to 6 months after you've bought in your house and sold your other one.
Got it. Okay. And so moving along, we've gone through some different options. Thank you so much, Alex, for those great
You're
things.
very welcome.
I'm going to have you stay just in case we do have any questions from anyone about financing. And again, I'm going to make sure that if you're watching this later, because this has been the case with our webinars, is a lot of people get busy and then they have a chance to kind of watch it later and catch up. I know for me, I have a whole file folder in my Gmail that's webinars to watch later. So maybe we'll make your folder there. But anyways, so if you've looked at these pros and cons and you've looked at the financing options, how do you know which path is the best path for you? Well, this is what my suggestion is. The first step is really to obtain a current market evaluation of your current home. Get a really good sense of what is it worth. Then review the availability of appropriate future homes. And at that point, you will have a good idea of which is going to be easier, selling or buying. And it's not true. It's not the same for everybody. It really depends on what you're selling and what you're buying. Then assess your financial position and your options. That's where Alex is going to come in and be able to really help you review that. Then prioritize your acceptable uncertainties. Are you more averse to moving twice or paying 2 mortgages? Are you more averse to feeling rushed on the sale or on the purchase? And I can't answer those questions for you. Those are questions you have to really identify. And if you make a list of kind of pros and cons, I find that usually people have a clear sense of which path is going to be better for them. And then also assess your willingness to live in the home while it's shown. And so some people absolutely don't want to do that, and some people are totally fine with that. So that's, again, also an individual situation. Finally, we come to, is now even a good time to make a move? So we are starting to get more people kind of reach out and ask us real estate questions. And yet a lot of people are still saying, oh, I don't know, too much going on right now. I'm not going to make a move. I'm going to wait. Okay. Should you wait? Well, economists are projecting, and I've seen some projections that real estate prices, I just started seeing projections from I think CoreLogic in the last couple of days that maybe there's going to be actually a decline in real estate prices. That's nationwide. Real estate is very local. And the projections are that prices in Los Angeles and Orange County are going to continue to increase modestly over the next year or so. And the reason that's important to you if you're making a move, particularly if you're moving up, so you're moving to a more expensive home, is that as prices increase, the gap between your current home and your next home gets larger. It doesn't get smaller, it gets larger. The other thing is you want to be really aware of interest rates. So right now, Alex, interest rates are about what?
3.25, sub 3.5%.
That's incredibly low, incredibly low. And they are unlikely to be lower than where they are currently. Are they going to go up? Who knows, right? There's so many factors involved in that. But what we do know is they are incredibly low from a historical standpoint, and they're unlikely to be lower. And so if prices went up and interest rates went up, your monthly payment for your next home will definitely go up. So if you aren't in the home that you want to be in, and you could be, why wait? That's my synopsis. I'm going to check and see if we have any questions. It doesn't look like we have any questions, but I'm going to make sure all of the contact information is posted when we post the replay of this video. And whether you're watching us live or you're watching us later, we so appreciate you tuning in. We are happy to be a resource for you and answer any questions that you have. Anything you want to add, Alex? I just really appreciate you being here with us.
That was it. I do appreciate as well being here. I really enjoy working with the clients that the Shannon Jones team has, and I look forward to working with future clients of the Shannon Jones team. And I'm readily available weekends, after hours, and just want to help you with a plan. That's my whole goal. Is it makes the transaction a whole lot easier when we've done some planning for it, and that's why I'm here for you.
So let us help you plan. If if it's a year from now, 3 years from now, whatever your time frame is, there are things that you can do between now and then. And that's like a whole nother webinar topic, but things you can do between now and then that will put you in the strongest position. So if you're thinking about doing projects to your home and you're wondering, will it add value? We just came out, in fact, if you're not on our newsletter list, you probably want to be. This is our latest newsletter, which goes over cost versus value. Which projects have the biggest return? So that's super important. And they're not necessarily the projects you think they would be. So a lot of times I come into a house and people are like, oh, we just did this, this, and this. And I just go, oh, wow, I wish they didn't spend that money on that. But they already have. So if you're thinking that you might make a move in the next few years, introduce yourself, call, email, text, Facebook, Instagram, whatever you want. Go ahead and reach out. And we love being a resource, love answering your questions. So just reach out. We can let you know what should you do between now and then to put yourself financially in the best position, to your home to have it be in the best position. We can set you up so that you're getting emails for so you know what the value is going, what's going on with the value of your home, what homes are coming on in different neighborhoods. We have tons of resources. We have a digital guide to selling your home during a pandemic. I have a guide to buying a home from home. So we just have a ton of resources and we love sharing them. We look forward to connecting with you. Thank you so much for joining us. And everybody, please stay safe, stay well, and be kind. A lot of stuff going on in our world, and I don't want to talk about it because it's going to make me tear up, but just be kind to everyone. Take care. Thanks. Bye-bye.